Bitcoin is a digital currency that runs without any kind of defined management, bank supervision, or government regulation. Instead, it uses encryption and peer-to-peer software. All Bitcoin transactions are recorded on a public ledger, and copies of it are stored on servers all around the world. One of these servers, referred to as a node, may be installed by anybody with an extra computer. Instead of depending on a single point of trust, like a bank, these nodes cryptographically agree on who owns whose coins. But you have certainly heard all about these things. So the main concern in this video is Bitcoin, how it works, and the mathematics behind its working. Stay with us and watch the video until the end. And if you are new to the channel, don't forget to subscribe to CryptoWave for better understanding and significant earnings. Let's get back to the video. A new decentralized payment network called Bitcoin went live in January 2009. This new technique was developed by Satoshi Nakamoto, a pseudonymous author or group of writers, according to a piece that was published on the cypherpunk mailing list. The cypherpunks are cryptographers and anarchists who have been concerned with online privacy since the 1990s. Cryptocurrencies are part of the blockchain and the network required to power it. A distributed ledger, or blockchain, is a common database that houses data. The blockchain uses encryption techniques to protect data. On the blockchain, when a transaction occurs, data from the previous block is copied to a new block with the new data encrypted, and the transaction is verified by validators or miners in the network. A new block is created and given as a reward to the miners, who verified the data in the block after a transaction has been confirmed, and they are then free to use, hold, or sell the new Bitcoin. The information held in the blocks on the blockchain is encrypted by Bitcoin using the SHA-256 hashing algorithm. Simply explained, a 256-bit hexadecimal integer is used to encrypt transaction data that is stored in a block. All transactional information and details related to blocks before that block are contained in that number. A backlog of transactions is created for network miners to validate. In the Bitcoin blockchain network, many miners simultaneously attempt to validate the same transaction. The nonce, a 4-byte number contained in the block header that miners are attempting to solve, is worked on by the mining software and hardware. A miner continually hashes or generates the block header at random until it reaches a target value set by the blockchain. The block header is solved, and a new block is generated to encrypt and verify additional transactions. Moreover, Bitcoin mining may be done using a wide range of gear and software. On a home computer, it was feasible to mine Bitcoin competitively when it first came out, but as it gained popularity, more miners joined the network, decreasing the likelihood of being the one to solve the hash. If your own computer has modern hardware, you can still use it to mine, but your odds of successfully solving a hash on your own are extremely slim. This is due to the fact that you are up against a network of miners that produce 220 quintillion hashes per second. Application-specific integrated circuits, which are machines made exclusively for mining, have a hash rate of around 255 trillion hashes per second. A machine with the most recent hardware, however, hashes at about 100 megahashes per second. The mining network needs 10 minutes on average to validate a block and provide the reward. 6.25 BTC are awarded for each block in Bitcoin. For 1 BTC to be mined, this equates to around 100 seconds. You have a few alternatives if you want to effectively mine Bitcoins. You may join a mining pool and utilize Bitcoin-compatible mining software on your current personal computer. The big ASIC mining farms are challenged by mining pools, which are collections of miners that pool their computing power. Additionally, you may purchase Bitcoin through a cryptocurrency exchange if you don't want to mine it. Due to its high price, most individuals won't be able to buy a whole Bitcoin, but you can buy fractions of it on these exchanges using fiat money like dollars. For instance, by setting up an account and financing it, you can purchase Bitcoin on Coinbase. Your bank account, credit card, or debit card can be used to finance your account. More information about buying Bitcoin is provided in the video below. Initially intended and launched as a peer-to-peer payment system, Bitcoin, but as its value rises and it faces competition from other blockchains and cryptocurrencies, its use cases are expanding. You need to have a cryptocurrency wallet in order to utilize your Bitcoin. The private keys for your Bitcoin are stored in wallets and must be inputted when making a transaction. Many businesses, shops, and stores accept Bitcoin as payment for products and services. The phrase "Bitcoin accepted here" is typically shown on signs at physical businesses that accept cryptocurrencies. Transactions may be completed using the required hardware terminal or wallet address through QR codes and touchscreen apps. By including this payment option, an online business may quickly accept Bitcoin. As Bitcoin gained prominence, investors and speculators developed an interest in it. Bitcoin sales and purchases were made possible by the emergence of cryptocurrency exchanges between 2009 and 2017. Prices started to increase, and demand climbed gradually until 2017, when it breached the $1,000 barrier. Many people started buying Bitcoins to hold because they thought the price would keep rising. Short-term trading on Bitcoin exchanges was introduced by traders, and the sector quickly expanded. Like with any new technology, it has been challenging to regulate Bitcoin. The American government seemed to establish laws around Bitcoin, but at the same time, it walked a fine line in attempting to avoid stifling a developing and lucrative sector. America announced that it will work to stop the use of Bitcoin for illicit purposes while also promoting its growth. The U.S. has placed a special emphasis on controlling cryptocurrencies and their illegal applications abroad. For example, it has penalized cryptocurrency exchanges and personal wallets and recovered Bitcoin payments made to criminals. Additionally, it has been suggested that the U.S. create a central bank digital currency to properly direct these penalties. Now let's talk about some of the technicalities behind the workings of Bitcoin that no one has ever told you about. The Bitcoin protocol may be thought of as a network-based mathematical system that maintains transaction data and fosters majority consensus among the users. Therefore, we automatically get an honest agreement if the majority of the participants are sincere. Decentralization, or the lack of a centralized organization, is its key characteristic. The network's nodes are voluntarily joining members with equal rights and responsibilities. Everyone is welcome to join the network. The network is robust and unstoppable once it has been launched. Since January 2009, it has been operating continuously with few noteworthy interruptions. Open development and code are used. Hundreds of additional cryptocurrencies based on the same ideas have been made using the same code, tweaked. Strong encryption, many orders of magnitude stronger than the cryptography used in traditional financial services, is essential to the network's security. For instance, the elliptic curve digital signature technique and classical hash functions are used. One should not spend too much time on the mathematics of these cryptographic tools because the cryptography utilized is relatively common and widely understood. But the exciting cryptographical study is encouraged by the unique characteristics of other cryptocurrencies. The Bitcoin network is made up of nodes, which stand in for the Bitcoin programs operating on various computers and interacting with one another. The network is inundated with properly designed Bitcoin transactions, which are regularly verified, broadcasted, and confirmed by the nodes that adhere to a strict set of guidelines. The nodes cannot be made to abide by these standards in any way. To generate a positive feedback loop, incentives are designed to make breaking the rules financially costly. We hope that this video will be helpful in learning about Bitcoin and how it works. Subscribe to CryptoWave for more similar videos.